think Bitcoin is going to plunge at the same time that gold's going to be making new highs. I mean, I think gold's broken out. It's taking off. It's about to hit new all-time record highs. It's already hit all-time record highs in, pounds, in euros, in yen, and all these other currencies. We're just a few bucks away from an all-time high in the dollar.
Euro-Pacific Capital CEO and renowned Bitcoin critic Peter Schiff has raised concerns about the future of cryptocurrencies like Bitcoin, predicting an imminent collapse. Schiff has suggested that a worldwide transition from fiat currencies to digital alternatives could be the cause of this potential downfall. In the world of Bitcoin, longevity may not necessarily mean success. According to Peter Schiff, if the cryptocurrency manages to survive the next 20 to 50 years, it may only lead to more people losing money. Schiff believes that Bitcoin's success is dependent on more people buying it, which is the only way to drive its price up. Unlike traditional assets like real estate, stocks, or bonds that generate income, Bitcoin does not provide any tangible benefits. It's not a commodity like oil or gold that has industrial or practical uses, making its value highly speculative. Therefore, Schiff suggests caution and warns potential investors to be mindful of the risks involved. Before starting the video, please subscribe to our channel and click on the notification bell to receive more informative content.
The problem with Bitcoin is you've tokenized nothing, right? So at least with gold, you tokenize something. Bitcoin can't work. I mean, yes, as long as there are people foolish enough to buy it, the price could go up. But eventually the people who are buying it are going to want to sell it because they don't want their Bitcoin. They want to buy things. They want to buy a car or a house, take a vacation, buy food. And the farmer doesn't want Bitcoin. The guy that's selling a car doesn't want your Bitcoin. So in order to buy anything with Bitcoin, you got to sell the Bitcoin. Well, now you need somebody else to buy it. Well, if you run out of buyers, then the whole thing implodes, right? That just like any pyramid or chain letter, I call it a blockchain letter. It's the same principle as a chain letter. So it doesn't work. In contrast to gold, right? Gold is a real commodity. There's always a market for gold. At any price, jewelers will buy gold. If gold is $5,000 an ounce, they're going to buy it. The electronic industry needs gold. If it's $5,000 an ounce, they're going to be buying it, right? There's always going to be buyers for gold. And central banks around the world, if I'm right, they're always going to be accumulating gold. They need gold as a reserve, especially if they move away from the dollar. So you always are going to have demand for gold. There's been demand for it for 5,000 years. And it's because of its actual properties as a metal that it's so valuable. Bitcoin's only properties is that people think they're going to get rich if they buy it. And they can only get rich if they buy it if there's a greater fool willing to pay a higher price. Now, yes, This thing has gone on for a decade. It's gone on longer than the tulip bubble. So, it's setting a record in longevity, but, it's still going to end in disaster. The reason I think that the institutional adoption is over is because, I think that was big in 2021. They kind of got in at the top. The institutions kind of put their toe in the water at $40,000, $50,000, $60,000 Bitcoin. And they don't like the temperature. Even though it's come back to 30,000, they had to ride it down to 16,000. I think they're gone.
In Peter's viewpoint, there will come a time when the world will shift from relying on fiat currencies, leading to a resurgence of gold as a popular medium of exchange. Additionally, Peter expressed his belief that despite the hype around Bitcoin, it is unlikely to replace traditional currencies or gold as a widely accepted means of transaction. In his words, "I know there are some people out there that think they're going to use Bitcoin. That ain't going to happen." Peter posted a tweet. "The dollar's reserve currency status is in jeopardy, as is the American standard of living that depends on it. The best move you can make to mitigate your personal loss is to divest of dollars and dollar-denominated financial assets."
Describes what's been going on with the United States. And I think that when the dollar crashes, it's going to happen abruptly. And the dollar's reserve status is going to be lost before anybody realizes that it's happened. And I think that the writing is there on the wall for anybody who wants to take the time to read it. If you look at some of the events that have taken place ever since we were foolish enough to weaponize the dollar and apply sanctions onto Putin, I think that really highlighted the need, a political need, for the world to move away from the dollar. I think they already had an economic incentive to do so, but then we gave them a powerful political incentive to accelerate the process to de-dollarize, and that is exactly what's happening. And most people don't have a clue to the degree to which the United States depends on that dollar reserve status, because our
Mhm.
whole economy is built around a service sector. But without imports, there's nothing to service. I mean, we're just a gigantic logistics center where we distribute merchandise that we import and then, distribute it to the population. But if we can't import all the goods, well, then there's nothing left to distribute. I mean, the whole thing comes collapsing down. And how do we pay for $1 trillion a year worth of imports with our dollars? That's our trade
Yeah.
deficit. It's $1 trillion a year in goods. And we pay for it just by printing money. But the money doesn't cost anything to print, it's free. But all those goods require the expenditure of significant resources. Land, labor, capital goes into the production of these goods, and we basically get them for nothing off of the reserve status of the dollar. And the foreigners who are selling us all this stuff, they just take our paper and they buy treasuries or they buy mortgage-backed securities. But when that stops and the dollar crashes, Americans are going to be too broke to afford to import stuff. And we don't have the capacity to produce what we'll no longer be able to afford to import. And so it's going to be a collapse in the American standard of living.
China's buying spree for gold continues as the People's Bank of China, PBOC, reported an 18-ton increase in the country's gold reserves in March. The nation has been consistently adding to its gold reserves since November, acquiring more than 100 tons in the last 5 months alone. China now has a total of 2,068 tons of gold in its coffers, cementing its position as one of the world's top holders of the precious metal. Recently, Peter said in his tweet, "Today, the gold price closed at a new 52-week high. Yet senior miners still need to rise by over 20% and juniors by over 25% to hit new 52-week highs. The divergence is due to negative sentiment. Investors still don't believe the rally is real. It's real and will be spectacular."
So yeah, the smart money is buying gold. I mean, they've been buying gold for years because this train wreck was obvious for years. But now, it's happening. Gold is, I think, this morning at 2,040. I think it's headed significantly higher from here, multiples of its current price. And if people were smart, they would take their money out of the bank, their long-term savings. I mean, obviously, if you need money in the bank to pay bills, short-term operating cash, yeah, leave it there. But for longer term, don't leave any long-term savings in the bank, because you're going to lose it. Either the bank's going to fail or the money's going to fail. But either way, you're going to lose. So you got to take your money out of the bank and do something else with it. You can buy gold and silver because it's much, I think, safer than owning cash. Or you can invest it. So these countries are going to have gold, and that's much better because gold is not simultaneously somebody else's liability. It's a real asset. Nobody can sanction your gold. Nobody can take your gold away from you, assuming you store it yourself. So if China and Russia have their gold reserves in their country and the Chinese decide to do something that America doesn't like, well, America has no retaliation financially.
Exactly.
America can't do what it did to Russia and Putin. And so people want to put themselves in a position where they're not beholden to the whims of American politicians, but also they don't want to have to loan all this money to the U.S. government. They don't want to have these huge trade deficits with the United States.
Peter Schiff has predicted a global shift away from fiat currencies, but he does not believe that this will lead to widespread adoption of cryptocurrencies. As a staunch supporter of gold, Schiff has long argued that digital assets like Bitcoin are unlikely to be embraced globally. Instead, he sees a continued preference for gold as a store of value and medium of exchange. This concludes our discussion for today. Do you agree or disagree? And what are the reasons for your stance? We encourage you to share your thoughts in the comment section below. If you found this video informative, please give it a thumbs up. Don't forget to subscribe to our channel to stay informed on the latest news and videos. Thank you, and we'll see you in the next one.